Nice to join you in the boardroom, guys.
All right. All right. I was just going to try this out and see if it worked. It would be kind of fun to see faces. And I also have the ability to basically have this thing set up for a large presentation auditorium too. So it's just interesting to see. Finally interesting to see some faces for a change. I mean, I miss all you guys. Yeah, Kirk, we do look like a bunch of little boys in a big corporate boardroom. So on the lower left here, what I was going to do is, this is kind of my agenda for the day, unless you guys have some other ideas. But I'll go over the portfolio that we came up with in August, and then I'll show some of the money flow things that I keep on tracking. And then we'll go to take a look at excess profit, the calendar trades that were in place for this past month. And I will also have, I think I have a poll for everybody so that I can see how, if people took the trade, didn't take the trade, what kind of returns I got. But we'll see what happens here. Let me start by showing the portfolio. So August, we came up with this group of 4 stocks: Apple, Amazon, Tesla, Google. And if you would have bought them on the following Monday, just those 4, you would be up with $100,000. You'd be up about 30.2%. So that's not a bad return on capital in just 3 months. Yeah. And then Scott, at the end of the one, he was saying to take a look at BX, which is BlackRock. And so if you would have put BlackRock in the mix, you'd be up only about 29.6%. But almost 30% either way, that's pretty good for a buy and hold portfolio. And I want to thank you all for contributing to that. That was a very nice gain there. I've been trading in and out on these things as opposed to just buying and holding. I think I would have done better if I would have just bought and held. So let me show you the money flow. Last time I was talking that I thought that the market was going to see a pullback, and it isn't pulling back barely at all. I mean, we're seeing money is barely flowing in, and the S&P 500 is going up. Money is flowing out of IWM, and it started flowing out 3 or 4 days before the market actually price action started showing up. But yeah, so it's nice to be able to have a little bit of anticipation as to I basically tighten up my stops when I do that, or not trade the IWM. For me, I'm trading the triple, so it's TNA. And technology has been riding up really nicely quickly. We've got money flowing in, everything's going good. Steve put a trade on this past week, I think right down in here, on Soxel, and Soxel has been doing well since he came up with his recommendation, his trade recommendation. And this one is the Dow, and the Dow is basically been going flat. This hasn't been going anywhere. So and China, there's China, and it's basically been going sideways. There's been no major action one way or the other. The thing that bothers me about China, the FXI symbol, is that it gaps up, gaps down after every night. So I have no idea, and that's just not very tradable. I'm looking at it more for the money flow and to see if there's anything major going on in China. So that's pretty much all of the money flow ones. What I'd like to do, let me see if I can post a poll here. Can everybody see a poll there in front of them?
Yes.
Okay, cool. And if you guys could just fill that out real quickly. Basically, we had a trade last month, which was the cat trade. And then if you scroll down, we also had a SPY trade. And I'm just curious to see how many, if any, people took any of these trades. And then, and as well as if you did take them, if you made any money on them. So on the cat trade, I guess somebody lost money on it. It's hard to hear that. And 0 to 2% from 2 people. Interesting. And then on the SPY trade, 0 to 2%.
This is Bill. I did not take the cat trade because of the fear of the John Deere strike, which did happen.
Yeah, it did happen, but it's interesting. Okay, so all right, with somebody on SPY did a 10 to 100% gain on SPY. So that was interesting. So it'd be interesting. So what I was going to do is I was going to show some of what I had done. Interesting. So 5 people took the trade basically on SPY, and nobody took the trade on, or no, 3 people took the trade on CAT. Okay. All right. Well, thank you, folks. Let me show you, let me go into a little presentation that I had on doing these calendar trades. Maybe some success here. We'll see. Hide this.
Ken, can I ask a question?
Yeah.
You mentioned earlier on that 4 or 5 stock portfolio, buy and hold 3 months, 30% thereabout. And you also mentioned that you did not do buy and hold, but you traded in and out of those stocks,
Yeah.
but you made less return than the buy and hold.
Correct.
When you did the in and out trades, were you using the Ken stochastic technique?
No, I have the thing called Holy Grail. And it basically goes in and out, trades in and out, in and out, in and out. And somebody is hearing background noise there. Let's see here. Hold on. Hide names, hide control. Okay. All right. So I have a thing I call the Holy Grail. I'll give you an idea of what it looks like. It basically it's basically trading in and out through the day. So here's an example here. It buys here, it sells there, it buys here and sells there. And I do that on a lot of different stocks. And so it minimizes my risk. I have very, very low risk. This strategy, the strategy is I call it the Holy Grail because when you look at it, you'll see the performance report, and you'll see that you got a 98% probability of success, between 98% and 100%. So I like that. So I will trade that. The thing is that you get a really great profit factor, 28 times profit factor, but your return on capital isn't as good as a buy and hold. Buy and hold, generally you make more money than if you try to trade it in and out. But I'm executing a lot of different things going on simultaneously, and I'm trying to find out what the limitations of my systems are. So I should have, looking back, and I will probably just start scaling in. That's what I'm doing. I'm scaling into a lot of different positions now with my major portion of my portfolio, so that I don't have to do all of this in and out, in and out, in and out through the day. That makes sense, Bill?
Yes, thank you
Okay.
very much.
Okay, so these were the calendar trades, and I'll show you some of what I did. So here was this cat track calendar trade, right? So you enter on the 26th and you exit the 6th. Well, I didn't know if I should exit the 5th, the 6th, or the 7th or 8th. I mean 8th. But this is typically, when I put it into the calendar, the excess profits calendar, these were the specific dates that they said, enter the 26th, exit the 6th. So I just maintained that, right? I maintained that on the calendar. Now, then it's up to individual discretion to figure out how you utilize that. So here's a cat trade. Here's that cat trade you entered here on the 26th, and since you couldn't exit on the 6th, you ended up having to exit on the 8th. So if you would have done the cat trade per the excess profits calendar, you would have made a 5% gain. Not bad, right? Now, if you would have done the cat trade and you would have done it with an option, a 210 strike option, that with an expiration of the following week, which was the Friday after this, you would have had a 200% gain. So if you take it, right? So if you take a 200% gain, so you have to have a point where you say, okay, I've made enough, get out, right? To me, that makes sense. Here is what I ended up doing. I bought on 11/27. So what I do is I tend to use a buy stop above the previous day's high. So on CAT, the previous day's high is up here. And so I didn't buy the following day because it was below that. So it followed down. So I basically said, okay, I'm going to have a buy stop above this day. And the next day came along and it didn't buy. So at the end of the day, I just said, you know, it's pulled back quite a bit. I'm just going to go in and just buy a call just on a fluke, right? And the expiration is going to be Friday. It's going to be this Friday, right? So I ended up buying it for at 11:18 for $1.55, and I sold it the 29th. It exploded the 29th, and I ended up getting $5 for it. So I got a 222% gain on that. So here is my exit envelope. When I go into a trade, I'm looking at not only a buy stop or a stop underneath it to basically get me out, but I'm also looking at an exit. If it goes up so fast that it's, you know, hit it out of the park, I'm going to take the gain. I don't wait. You know, if I get 2 days and I get a 200% gain, I'm going to take it. So that's what I ended up doing with the cat trade. Here is, so what I ended up, I said, well, you know, I made 220%. Can I do even more? You know, is there something else that I might be able to do? So at the end of the day, after the price action came way back down, I decided to go and buy take my original stake, which was about $1.62. I bought two contracts at 81 cents, but then I sold them at 20 cents. So I had a 75% loss. But so my net gain for the whole cat trade was 159%. So that's not bad for, you know, about 5-day trade. However, I could have, if I would have been more patient, I could have taken that same trade that I lost money on, just held it, just let it run. It would have sold, I would have been able to sell it for a $6 target on the 8th, which was the Monday after the calendar trade was supposed to be up. So that would have been an additional 200% gain. So the first gain was 200% and another 200% on that. So that would have been over 400% gain on that. So you could do some pretty cool stuff with options. The gain that you would have got with the cat trade, 5% gain, that's still not bad for a week. So it, you know, these things keep on happening over and over and over again. So SPY, Larry Williams.
Hey, Kent, before we move on to SPY.
Yeah.
I just want to point what was said on the previous meeting, at least the way I read it. I know, how it's interpreted on the calendar might be, subject to individuals, but I thought it was stated as 10/26 to 11/5.
11/6, I think.
October 26th to 11/5, and
11/6.
I mean that at least just rough tracking was in the single digit percent, like 1-ish% gain. But I tracked it, and I was thinking like on the 26th, I was thinking like there was nowhere where I would have taken that trade. On the 27th, yeah, that looked good. I called it a buy. I didn't do anything, but I was just watching this just for interest of our meeting, and yeah, and then the clear day to let it go was the following Monday, and that, I mean, the difference is huge. And just anecdotally, what I saw was on the underlying a difference of it was like 1.25% versus 9 something percent on the underlying. So it was it's just one of those things with these kind of time trades, because the calendar moves every year. It's like you kind of have to use your own trader's discretion whether or not the stated buy day is actually the day.
Yeah,
and this is just my opinion.
and that's what I did too, right? So I said, here is this cat. Well, am I going to buy it here? I will only buy, my normal mode of operation is I say I will buy it if it gives me a higher high. So if this would have been higher than this, I would have gone in and bought it, but it didn't. So I had a buy stop in place with the option, and it didn't trigger that day. So
understood. That's why I'm just kind of saying is like, well, following the exact dates of the stipulated trade range, kind of, you got to look at the calendar. You got to use your own systems. I mean, to me, honestly, I just eyeballed it, and it didn't look like a bottom on the 26th, and it was just like, well, I wouldn't take this today. And on the 27th, I saw it. It's sometime midday, and I was thinking like, yes, this would be a better buy day than yesterday. Right. And it was just simple as that.
Yeah, and so that that's what I'm saying. There is trader discretion, and it depends on how much you're going to look at it and your time frames. For somebody that basically just they want to put the trade in the morning, and they go to work during the day and they come back, they don't have the ability to do that, right? So you would have still made out. I mean, if you would have still made this out, you would have still made a profit. Anytime I can walk away from a trade with a profit, I feel good. It's when I lose, that's the pain in the ass. So that's why I created the Holy Grail, so I don't tend to lose. So anyway, so that was the SPY trade, the cat trade. Any other thing, Grant, there or not?
No. I just wanted to add that the trade could have been a lot better if you kind of just tuned it up. The individual trader tuned it up.
Right. Yeah, and a lot of times though, I find that it tends to get away from me unless I use that buy stop. The buy stop kind of keeps me in the game, right? So here is and this one here you would have probably said, Grant, this one was probably not a good entry point here either, right? I mean, the better entry point is way the hell down here, but I was just trying to see what was going to happen. I could not, on my trade, I can't lose money on it anymore. I've already made over 200% of my money. So the worst case is I'm going to only make 100%. So this is one of those where you just basically just put it in. If it works, great. If it doesn't, okay, fine. And this one would have worked out. I just got when I lose 75% on my option trade, I just get out. It's actually 50%. If I lose more than 50%, I'm out of there. So it was going down so fast when I finally saw it. When I finally got out, it was a 75% loss. But anyway, so here's the SPY trade. This was the SPY 2-day trade. And if you had $100,000, you went in on November 1st and got out at the end of November 2nd, you would have made a 0.44% gain, basically a $400 gain on it. $400 gain on $100,000. It's not, it's better than a loss for sure. But then how can you do even better? So what I did is an option trade, and I ended up doing a November 1st, November 2nd. My expiry was November 3rd, and I ended up with a 462 strike. I bought it at $1 and I sold it for $1.20. So I made a 20% gain in 2 days. So that wasn't too bad. Not great, but nothing to write home about. You could see if you would have tagged it, you could have probably got a 150% or a 50% gain out of it, or just waiting that little bit extra time, that would have been a home run. But sticking with the recommendation by Larry to do a SPY 2-day trade, he was using futures, and so even in futures you would have still made money. Made money on futures, you would have made money on the SPY itself, or you would have made money on the options. And then there's the 7-day trade that Larry talks about. And if you did the 7-day trade and you bought on November 1st and you would have gotten out on the 8th, you would have had a 2.2% gain. And that's not bad for a week. But could you do better? So in the options trading, using a 11/10 expiry, which is the following Friday, you take a 462 strike, doing the same trade, you get a 300% gain. So you got your choice. If you want to do, for me, when I see these calendars, I really want to, high probability, 90% probability. It's like either use futures or use options to trade these things. That's my preference. And Jake Bernstein and Larry Williams, they had some really good calendars. I was hoping to get Scott to come up with some trades for December for this month, but he is not able to make it today. So the only calendar trades I know of for November, December timeframe right now are the 2-day holiday trades that Larry Williams talks about. So it's a Thanksgiving, Christmas, and New Year's. So let me show you. If anybody has any other ones, if anybody in the group here has an idea for other calendar trades, let me know, put it in a chat, or any way you can communicate it would be great. I will have either Gene and Jennifer are my two co-hosts here. I'll have them hopefully keep an eye on the chat window and see if there are any other calendar trades that we have coming up, because that's kind of nice to be able to have 400 to 200% month trades. I like it. All right, so let me show you these calendars as I see them. I usually, I've been entering the data in the calendar, in the excess profits calendar, when it's over 90%, 90 to 100%. When it's 100%, it's definitely, if I hear about one of those kind of trades, I am definitely putting it into the excess profits calendar. It's not always guaranteed, but it's a high probability. If it's above 90, 95%, I will try to put it in there. The 80% and below, like what Grant is talking about, it's like, it's really up to the discretion of the individuals. So I just do this as part of this presentation here, and I will let people decide if it's worthwhile or not. So here is let me go first by the Thanksgiving trade. So the Thanksgiving trade On this one here, I had to write an indicator to find out what's the what the return on capital is for the last what was it, 20 years? Yeah, 20 years. And so so this is basically a 3-day trade. So 3 days before Thanksgiving, before the holiday Thanksgiving. Do you see this on the bottom here? Can people see that? I hope. 3 days before Thanksgiving, you enter a trade on SPY, and then you exit the day. So the Thanksgiving, the day before Thanksgiving, it's a holiday, and so it's a part day for the market. So you want to exit near the close of that day. So if you do this, that's just holding 3 days. You would have made 30% on just those trades over that period of time for an 84% probability of a win. So for me, this is still going to be a good one. So on Monday, I'm going to probably do a SPY trade, and it will expire probably on Thursday, on Wednesday. No, Friday. It will expire on Friday. So I will do a 1 week trade on SPY.
So Ken, for clarification, you said exit on the half a day, which would be Wednesday.
Right.
Now you're saying exit on Friday?
No, so the options expiry. So the options on SPY expire Monday, Wednesday, and Friday. And so do SPX. So what I'll do is I don't want it to, I may actually try it. I may end up trying to do the Wednesday expiry and just basically do a 3-day trade on SPX. What's cool is that you put it in on Monday and you just let it expire. You don't have to do anything else. You don't have to trade it again at all. They basically cash settle on SPX options. Whereas on SPY, you can be owner of some SPY, which could add up to quite a bit of money if you've got any number of contracts. That makes sense, Catherine?
Yes, thank you much.
Okay. So that is the Thanksgiving trade, and then the next one is the Christmas trade, and on that one I ended up doing a strategy, and that one has a 75% probability of success, and you get the profit factor of 6.82. So if you look at it historically, you can see that it's basically nice upward sloping. There are a few losses along the way. Will we get a loss this year? I'm willing to put in some money on it, at least with options, and see if I can make some money on a 2-day before Christmas trade. Okay. And then there is the New Year trade. And New Year here, if you do the New Year trade, you end up with a 62% probability of a gain, and you get a 10% gain. So New Year's, Christmas and Thanksgiving are the two big ones. New Year's, I don't know. I'm sort of reluctant to trade that one, but so it's up to you guys. I don't know how you like trading. If New Year's is something that would be of interest to you guys. Usually after New Year's is when the market hesitates for a day or two and then takes off.
Hey, Ken, this is Neil. I was very intrigued by what you showed very briefly in terms, I've never seen a 98% successful strategy. Are you willing to just talk about the concept of that, or?
Oh yeah, I could show you the concept. I can give you the strategy, anything you want to do. It's it's, so let me show you that. So the fundamental is, you know, like I say, buy low, sell high. I mean, it doesn't get any easier.
Wait, would you repeat that? I want to write that down.
And so you can look at any point here, right? And what it's trying to do is the price pulls back and then it starts coming back up and it says buy. And then what it does is it waits until it sees a sell signal. So here is the buy signal. This is using Larry Williams %R.
Okay.
With a little modification that I made to make it so that I can use it for basically everything. So it looks for the %R to come down. When it comes down and triggers a little change from the yellow to gray, it triggers and says a buy. So here's the buy here. And then it goes up to the top, and once it pierces the top part of the %R,
Right.
it starts coming back down. It's a sell signal. So here's the sell signal, and it will only sell if that entry is above the entrance. I mean, if its exit is above the entrance. So so if it's starting to go down, for example here, see it's starting to go down.
Right.
So it did a buy here. So here is the buy signal. Here's the buy signal here. So here's the buy signal. Well, it's going down. Well, it's not going to sell. It's going to buy another tranche here. So it buys another tranche here.
Okay.
And then it waits until that tranche becomes positive and it turns down again. So it bought here and then it sold here.
So how often would you do that? I mean, that could happen in an extended period or something.
So this is on minute bar charts. So
Yeah.
I trade this through the day. So I may get 40, 50 round trips in a day.
Wow.
Yeah. So, you know, people call me up and they say, they hear all these order filled in the background. And they say, yeah, it's just sucking money out of the market. So, but it's automation in place, right?
Right. Of course.
The problem is that if the automation, if something happens, you know, something happens with TradeStation, something happens with my Cox network, something happens with my power into my community, you know, if something happens to my computer, all these different possibilities can happen and it can take me out, you know, and I end up long a position. So I may be long 400 or 500 shares or something like that, in which case I usually pick up my phone and try to use my phone to see if I have to exit the trade.
Okay, but you just have the circle bar and not is there a trend filter that I missed you saying?
Is it what?
Is there a trend filter that just keeps you out?
Yeah. So if you look at the entire thing here, I have various things. So there's various enables.
Okay.
So you can enable it with Larry Williams hierarchy, what number of days ago. You can enable it with number of bars back. I got this thing called a GAN. So there's a lot of different possible enables, but usually I leave all those off and I just basically let it. I'm basically in a market that's going sideways or up a little bit or down just a little bit. Either way, if it's just going down a little bit, up a little bit, I can make money, right? As long as it sees these little fluctuations during the day, this trade here, this little fluctuation here made 76 bucks, right? So that was a $76 trade there. So it's like, you know, it's nice to just be able to sit back and in about 20 minutes, you collect the 75 bucks.
Exactly. Yeah. Wonderful.
That's not bad. So that's the Holy Grail. And if you need
So when you have an automated system on, you tend to babysit it at least a bit so that you can tell if all of those aforementioned things are working properly and such.
I'm usually sitting somewhat near my computer most of the day. once in a while, I go out and go for a hike or something like that. But typically I'll just leave it alone. Especially if I know the market is basically floating or going up a
Right.
little bit, I'll just
Okay.
let it go. Because sometimes it craps out. It will crap out in the middle of the day. I have two different versions, well, three different versions of this Holy Grail. And the original one that I posted is on my Ken.Excess Profits website. That one just keeps on buying and buying and buying and buying and buying. And then it sells. So it always makes profit. It's 100% probability of profit. But it would have bought like 3 times down here, right? This one here is a little smarter, and it says, okay, wait for a pullback. And when it sees a pullback, then it says buy.
Okay.
So I'm trying to get it smarter and smarter as time goes on. The one that's on my website is the old version, and then I tried to get one that's more robust that you can turn off your computer, turn it back on, and it figures out where you were, and it tries to proceed on from there. So it's, even if anything craps out in my network or Cox or TradeStation, it'll automatically figure out what needs to be done and keep on going. But that's where I want to go with this one too, but I haven't been able to get there yet.
Gotcha.
And the Holy Grail that's on the website, there's no parameters. It automatically figures everything out. So that's why I called it the Holy Grail. It's like, you don't have to worry about it. Just turn it on, let it run, it runs. So, but it doesn't give you as good of return as if you did a buy and hold. So anyway,
Right, but like you said, you greatly control the risks. So,
Yeah.
So that's the payoff for maybe less profit than a buy and hold once in a while. But I bet in many cases you're doing better than buy and hold.
Well, if it's in a downward market, yeah,
Yeah.
I can do better than that. So I wanted to run something. I wanted to run something by you guys. I don't know if this makes sense to people, and maybe we got enough people here that are into graphical user interfaces that they can show me something that's better. All right. So this is, I was trying to figure out how to show on one page the P&L. So here is price action of gold, and so you're going to say you're going to buy it. So when you buy it here, this graph on the right here shows the P&L, right? So if you buy and hold, when it goes up, you're making money, you got a gain, and then when it goes down, you're losing, right? So you got this red area. So it's a way of looking at P&L versus price action all on one chart. So and then there is another one, which is you say, okay, I'm going to do a stop loss. And so with a stop loss, you have the same thing. So you say, okay, when price action goes above this line, you're going to make money. Great. When it goes down below a certain value, you're going to say, I'm going to get out of there. I'm just going to stop the loss. So I'll lose, and then once I get down to here where it's support, I'm basically going to stop it. And so you have a maximum stop loss, and then you have your gain. So that's typical trading, and that's what I've been doing most of the time. The Holy Grail is trying to get around some of that. But with options, I'm trying to find ways of doing even better than that. It wouldn't be nice if you could have, let me show you one, which to me, this is the ideal trading here. So ideal trading would be 150%. Ideal trading would say, okay, if it goes down the center of the channel, it makes money, right? So if here is resistance and here is support, and so as long as it goes down the center, you make money. Great. And then if it goes up, you could possibly lose a little bit, but typically you will actually make money. So for me, this is the ideal P&L curve, right? So you make money if it goes up, you make money if it goes down, and you make money if it goes sideways. So my question to you guys, how do you do this?
Maybe just on the representation of your chart, I'm kind of thinking you have price movement on the y-axis, and I would flip it to the x-axis, because so that you see your profit as an up and down. Does that make sense?
Well, so you want to relate it to price action, right? My problem was relating it to price action. So here's price action here, right? So horizontally is price action. And if price goes up, I want to indicate somehow that
yeah, I understand, but I just mean I'm used to seeing a P&L chart that
sideways.
x-axis is the underlying, and then your profits, because that's the thing you want to watch, is on the y-axis. That's just the way I'm used to seeing it. So I'd see this, flipped on its end, and that you'd see the angled up green bars going, up to the right and up to the left. Yeah, it's just what like I would.
Yeah, yeah. I'm the same way. That's what I typically saw using all the toss things. But I was trying to relate this for other people so that they could see, the contrast between, buy and hold, stop loss, and then what would be the ideal. And you're comparing it to, I like it comparing it to price action. But each person's got its own way. I can look at it either way. My brain flips it any which way. So I don't have any problem with it. But anybody know how to do this? There is a way. There is a way to do that. And I've been doing it. I'm having a hard time because the market is basically fluctuating, going sideways. And I haven't figured out how to do this graphically, like Grant was saying. I put the numbers in the thing. The only thing I can show you is the support and resistance and stuff. And so these are my trades over the last 2 months, I guess. And so I ended up with doing the iron condor. So here's an example. Here's one where this week it went right down the center of the iron condor. So the iron condor says you're selling an iron condor, and if it goes down the center, you make 52% return on capital. Very nice. And then if it breaks out down or up, you there's Tushar. If it breaks out down, then you basically buy back the short put and you let the long put run. This one here, it broke out to the downside and it proceeded really quickly to move back up. So what ended up happening is that I ended up exiting the short strike first, and then long strike because it came back up. And so I ended up with a 3.8% return on capital. So 3.8% return on capital for a week is not bad. 51% is far better. But that was my initial take on it. And then here's one where I started the same thing every week. So these are weeks. So this yellow highlighted part of the chart is a Friday. So the following day is a Monday. So I put these things on Monday, and then I see what happens through the week. And this particular one was a stellar move. It broke out through my short call side. It kept on going. I made money on the long call side, and so I ended up with a 67% return on my base initial margin. And when you figure out the price that I had to pay for the short call, it derates the return on capital to be about 22.9%. But then I also rolled up. So Tim Sire keeps on telling me, you roll up the other side, bring back some more premium. And so I did. So I rolled up the other side. I rolled up the vertical put side, and I collected another $1.40 on that side. So each one of these things, it's been really nice. I haven't had a losing a losing trade in, oh, here's one, in almost 2 months now. So, and the market, I don't have to worry about which way the market's going. If it's going up or down, I don't care. So it's going back to that chart, which the ideal trading, this trading, which says that no matter which way the market is going, if it goes up, if it goes down, I'm making money. If it stays sideways, I'm making money. So it's not, people might be interested in that, especially if you are one like myself who, yeah, I don't know which way the market's going necessarily. And Tushar there, I see him, and he's basically biasing it, and he's saying, okay, he thinks the market's going to go up and it's going to go down. So you choose your poison. Anyway, so any questions, comments?
Hey,
I think
Ken,
we're all
didn't-
here.
Didn't you just say you were going to take the SPY on Monday?
Yeah, oh, that's true. You're right.
Yeah,
Yes.
let's talk about that.
Yeah. So good point. Good point. So SPY is SPY or SPX. So there's SPX and there's SPY. SPX, what's really nice about SPX is that if you buy the options on it, they will expire and you get cash settlement. And also, if you trade the options on it, you also get a tax advantage, a 60-40 tax advantage, that 60% of your gains are considered long-term and 40% are considered short-term gains. Something here. I don't know how many people do this. I don't know how many people use trades, Thinkorswim, but this is the little trick that I use when I am looking at trying to trade options, and I will look at support and resistance. So I see, here's SPX. So I see support somewhere around 46. Well, wait a minute, that's too tight. 46.70, somewhere around 46.70, I see support. So I'm going to put in a put at 46.70. So there's going to be a put at 46.70, 46.60. So that's going to be a vertical. And then I'm going to try to do a iron condor. So I'm going to go up that same amount from there. So I'm going to say, I'm going to put on another vertical above that. Actually 60 above that, 60 above that. So it's going plus or minus 30 here. So this is basically an iron condor. Now, what I want to see is if it goes below this point here, I want to be out of the trade. If it goes above this point here, I want to be out of the trade. So as long as it stays in this general range, I'm going to make, it's $1,000 of margin required, your buying power, and you're going to basically collect about $4.85. And this is for the 26th expiration. So that's going to be Friday. So then you could say, okay, if you look at the chart, there's nothing on the charts. Everything's clear on the charts, right? So if you go to the analysis tab and you click on this little tab here and you say set slices to chart, you do that and you find out it graphically, it puts those lines on the chart. So for me, this gives me a really nice confirmation that my support and resistance are in the right range. And if you look at this week, that's exactly what happened. It basically went right down the center of this channel. So if you're trading options, if you're trading this kind of a vertical, iron condor, you can basically put this on the chart, see it here, get your return on capital, and deal with it on the chart. Then the question is, what happens if it goes and breaches the support? And that's where the that's where the discretion comes in. When it breaches that, how do you handle that? And Tushar would typically get an alert, and he would handle it some way, shape, or form with an alert. I have too many of these things going on, so I have to figure out some way to handle it using some form of automation. TradeStation, I can do that. Thinkorswim has been a problem for me, but I'm working on it so that it can do it. It can trigger automatically and make money either way.
So this is your plan for Monday?
Yeah, that's my plan for Monday. But if you want to do, I don't know what your plan would be for Monday. How would you do that, Grant?
Oh, I'm kind of on the opposite side of things. I think there's a small chance of breakout coming soon.
Well, so to me, this is what a breakout does. So you put on this iron condor, and then if it goes above it, like I was showing in that.
I understand what you're doing, and yeah, there's a good chance that Monday, Wednesday, it'll be fine. It'll stay in that channel and all hunky dory.
Yeah,
I think it could. There's a chance it could pop. Not before the holiday. I see the risk more after, but I'm playing for long bullish.
okay. So how would you play this long bullish? Do you trade options at all, or do you trade?
Yeah. I'm just mostly long. Either funded with short calls or whatnot, but I covered calls, but mostly purchases, mostly long calls.
So you're doing long calls, or are you doing
Kind of long on everything. I'm not big on getting the premium unless I just kind of like, if I'm trading something that's kind of expensive and I own it, it's then I don't mind trading that and getting a little bit of premium, but I'm playing kind of for the use a vertical up and some protection going down. It's not I don't really use 4 position strategies or anything like that.
Okay.
Grant, what is your position on the debt ceiling that's going to hit on about the 15th of December?
Yeah, I think usually the governments, the history is they work around it. They get past it because their whole job is to get that done. And every time there's news that, there's this, and we're going to do that, and the government's going to shut down, it never happens, right? It hasn't happened yet. So my basic premise is all that is non-news and just, move past it.
Okay.
Yeah, and Larry Williams in the video that I sent out, I think it was the last time, said the same thing. He was basically just saying, forget about the news. He said, just trade the seasonal stuff, and it takes care of itself. The news that these other guys are doing, like Grant is saying, you got how many people in Congress and dealing with all the debt ceiling and stuff like that. They're going to finally get something out there. We'll have to see exactly what, but are they going to shut down the government? I think it's happened once before, but I don't think it had any major impact on the stock market.
Yeah, it was brief and then it was done. It's one of those things. Like it just never is going to be a big deal.
Right.
Well, the issue is it causes a major gyration in a recovery.
That's not a bad thing to me.
Yeah. Well, if you're trading something like this and you get a major gyration, that sucks because it whacks you one way or the other. And I'm trying to figure out how to mitigate the losses when it does that.
Right. If you're collecting premium, if you're long options, both sides, those are the win-win days for me. Any hedged put that I have or carrying, that stuff makes money too, and I can dump them both for a profit.
So are you using puts, protected puts?
Yes.
Okay.
Long purchases, costs. Those are.
So are you using calls to selling calls to offset that?
Sometimes. I haven't been lately. If I'm trading SPY, it's all cheap enough if I'm trading on the day or short term. Longest I've held was I don't know, about 2.5 weeks out. This last expiring yesterday. I bought some of those at the beginning of the month.
Okay.
And some in October. So maybe, yeah, maybe just like around 3 weeks, 2.5, 3 weeks was the longest buy I go. But all along, I haven't sold anything.
Okay. Well, good. You're making money. The trading that I've been doing on my IRA, it says it actually had me get out of TQQQ. So I'm missing the latest pump in DQQQ, but the other ones are still long. So and they're making okay money. I look at that portfolio that the group generated, and I'm not doing as well as that. That was stunning. 3 months and 30% gain. That's pretty damn good. So I am moving more and more money into that. Any others? Any other comments?
And what told you to get out of TQQQ?
I can show you on my IRA. So I have this thing called the case stochastic, and I will zoom in here. And so I basically, here's my buy here, and it stayed in until it came down below, it ended up below my adaptive moving average. And then the following day, it dropped below that. So it took me out. But what I'm doing is I'm using the Holy Grail, and I'm basically buying and selling and buying and selling on the way up again. So it's not, but I'm not anywhere near the magnitude of gains that I got from this gain here.
Okay, thank you.
Okay, sure. Any other comments? Oh, it did exit the TNA as well. So it entered the TNA here and exited up here. So TNA was really up, and then I cashed out. But SPX is still in play. All right. Any other comments, questions, suggestions?
One of the things I just to follow up from last month, there's some discussion on AT&T and the high yield
Oh yeah.
things. The only thing I found was that it's because of their spinning off or separating from their like the direct TV, it's splitting up a bit. So there's concern that the stock price is suffering, even though they're still paying whatever dividend for now, in anticipation of a cut of the dividend.
Interesting. So
Yeah, which is one reason why I haven't been looking at AT&T for a very long time, because it's like I don't really like their business model, and I don't think they're well positioned to make money in the future.
Okay. Yeah, and it's actually at a new it looks like an all-time, almost at an all-time low here. This is month calendar, monthly bars, and this is the all-time low here at $21 a share, and it's up at $24.13. So wow, it's really tumbled.
Hey, Cannon Group, this is Kirk.
Yeah, Kirk.
I posted, has anybody had thoughts of trading crypto out there and how to trade these beasts? Also, my sons and I, they've really gotten into investing, and we've created events or actions that could change the world stocks. Just any thoughts on these? I have a list of some of this stuff and what the group thinks about trading these. Some ideas about events and movements that offer world-changing potential and the related stocks. One of the course with Facebook announcing that they're going to go to Metaverse world. I looked at Meta ETF, which is from Roundhill. And of course, what they have in there is NVIDIA, Roblox. I'm not sure with that. You know, Microsoft, Facebook's going to change its names. I haven't looked into that. Some other interesting things that evidently some people are getting into is you can buy virtual land, sorry, misspelling, in the metaverse through Sandbox or Mana. I don't know anything about it. But I wanted to note that there were failures many years ago in what was a metaverse called Second Life. I don't know if anybody poked around in that. I never did. I didn't know anything about it. I guess large companies rushed into that, Coke, NBA, luxury brands. And today there's less than 500,000 users. So whether or not Facebook or now Meta ever makes a big impact on that, I think because of Facebook's presence, it could create that new invigoration for the metaverse. And so simply because they are changing their name and they see something in this, I think it's a real point to keep your eye on.
Can you explain metaverse and what's your interpretation of that?
Well, you're talking an old fart. My son got one of my sons bought that. Gosh, somebody out there help me out. It's some kind of reality thing.
Virtual reality
thing that I think was from Facebook.
Yeah.
Maybe one of the gaming consoles.
Was it the Oculus?
Yeah, Oculus, whatever, the latest Oculus.
Uh-huh.
Perhaps. It's got the two oval hand rings or round hand rings.
That's Oculus. You can buy them at Costco now and everything.
See, you already know more about it other than my son's bragging about it, saying that, they really do intend to create corporate meetings that everybody will meet virtually. You can handshake, you'll see others. And of course, you can modify your appearance like you can in many virtual realities. So, how much that goes on, like in TikTok, transfers to this whole 3D world that they want to create. And I guess Facebook is going to have you meet your Facebook group in a virtual reality. That's the rumor of where they're headed. Again, I'm not an expert in any of these things. It's just a point that apparently with Facebook making this move and others that have been here, that we really think it's about time that I'm considering this may really become an impact.
I think it sounds like it's going to have an impact. And I mean, you just saw some of what they did with Zoom here with the, they call it immersive technology.
Right.
And that's what the virtual boardroom was that you saw there. So
right.
It's along that line, but going to 3D as opposed to just a 2D rendering. So, okay. All right. Okay. It's not that I can see people gravitating toward it. And it does give you, I have worked with 3D sound in 1982, and that was just amazing where you can actually hear things in 3D that you had no clue. You're usually hearing things in stereo or in mono, but man, when you hear things in 3D, it's impressive. And in visual, it's got to be even more engaging. So yeah, I guess that's true.
Yeah.
So it'd be interesting how they capitalize on it. I mean, one thing is to provide the technology, and the other one is to provide the technology with a specific purpose that makes money.
Yeah, going back to this round hill, NVIDIA has just been on fire.
Yeah.
And you look at the Meta stocks in the Meta ETF, you got NVIDIA and these others. Well, I've already mentioned those. Let me go on real quick because I just want to present this. The electrification stocks, Tesla, don't need to comment on that. Rivian, Lucid, Rivian, my son got into that in its IPO last week and it was up 80% as of 16 November. I don't know how it ended the week. I haven't had time. And, electrification side plays, invest in the commodities used in batteries, all the other items. We need to talk about all of the chips that are used to control all of our electronic toys now. Those will continue to increase. And that's, again, as you know, Microsoft's bid in Arizona to build a huge plant there. Again, back to NVIDIA, all of that stuff could be involved because of the presentation that electrification presents, both in movement and in the household. And in crypto, I get it. Crypto, my youngest son was just bugging me to get in. I reluctantly loaded Coinbase, bought some crypto, and I have a tiny fraction. I don't own even a whole coin anywhere, but he's turned 5,000 into 19,000 last week in just a few months. It's just incredible what he's been able to do. And of course, that's Bitcoin, Ethereum, or Condor. Kucoin is interest for stablecoin, leading cash, leveraging crypto in their account trades. You can put cash into these. People borrowing cash to play cryptos. You get a really high interest rate per day if you're willing to do that, but your risk. This Kucoin, I think, is based in South Africa. You know, you could lose everything if they close up shop since it's offshore, have no idea, or a massive collapse in crypto and they can't close all their accounts soon enough and you lose all. So that's some of the risk and just high interest rates associated with it. BlockFi is another one. If you have crypto investment, you can put that in there. And then lastly, gene editing. With this mRNA vaccine, they're doing some phenomenal stuff that I have a lot of personal angel investments in biotech, and I'm concerned that these are natural, real genes, and with these gene editing tools that's been developed over the years, you could actually live just creating, editing your genes to create solutions to problems that your body may have. Those stocks, CRISP Edit, Caribou is CRBU, NTLA, Beam, and Plug, FCEL, or others. I got into some of these. I'm really disappointed. I got in way early and they're all down huge. So obviously just having the notion that these could be game-changing stocks doesn't mean you're going to make money, and the right time is another trigger to get into those. But I do believe that they will create a new reality for medical research and for medical solutions. So just some of the ideas I want to throw out there to investors, see if they had any thoughts on this. I thought it's something that we could throw out there for maybe a discussion in following meetings.
Good idea.
That's it for me.
Yeah, good. Yeah, the mRNA stuff is very intriguing. Other than throwing the billions at it from the government, I don't know how else you bet on them. And they're usually throwing those billions at the big names. So the ones you mentioned, Kurt, aren't those all small capital companies?
Oh yeah, they're still small caps, and they haven't had the, if you look at the huge electrification stocks, you look at I think, what was it, Rivian was larger than many of the Dow industrial stocks. I mean, it was phenomenal what interest that we saw in electrification and mobility. And there's much more behind that. We're talking about battery banks, and Tesla isn't the only one doing it, but there's a lot of other plays associated with that. But going back to your point with gene editing stuff, they're all small stocks so far. They're not big enough, but some of the big biotech companies, some of the drug companies are making big bets behind the scenes in some of these. And that's one of the things we don't know about until many quarters later, where they're forced to release that information. So all of those could be huge plays. And I see Catherine mentioned Plug and FCEL. They've made some good plays there. As I said, I got in too soon to, CRISPR and Caribou and one other. I'm down on all of those. It's a little frustrating. I just bought and I should have just been playing some option plays in those. But anyway, maybe we could
Are there
play with those
options?
later.
Are there options in any of those things?
Yes, they are.
Okay.
There's some nice options.
Or
And,
liquidity, enough liquidity to do something?
well, they're not going to be as liquid as some that you may. They're not penny-wide stocks or spreads in the bid ask, but in order to reduce my loss, I've been playing both crisp and caribou options and just trying to reduce my losses there.
Okay. Are you privy to any of the behind the scenes of what makes up those companies in terms of their executive staff or board of directors or anything like that?
Yeah, again, I've been in angel investors. In fact, one of them is in San Diego, and they screwed all of our investments as they did a reverse merger with a publicly traded SPAC,
Okay.
and just killed all of our investment with them. It was why can't I think of their name right now? It'll come to me. But I had 4 biotech stocks, 3 here in the Rocky Mountain region and 1 out in San Diego. Evolution Genomics. Now they were just trying to do genes that existed in the world. I mean, they're like Raiders of the Lost Ark. They go out and find genes that existed in old plants, like in the Middle East. They've done stuff down in South America at Machu Picchu. All these offerings given to those passing on, and they find seeds that had certain potential to resist rust. They do better in dry climates, etc., which is happening all around the world now. And so they were offering it to companies like there's a rust in bananas, and you may be familiar. Bananas are not, they no longer produce, they're not no longer produced from seeds. It's all replantation. So you can't lose the banana supply. And they had a big offering from one of the major brands of one of the major banana producers, and they were under consideration to help prevent this rust from this ancient gene that's no longer in the current genes of our bananas today. But this company got a hold of Gentech and decided that they could do this a whole lot faster if they just edited the genes. So there's going to be big plays in gene editing tools, both just for our own human health, but also our food supply. Anyway, there's a lot of different plays in this. And LBS, Leading Bioscience, that's what my investment was there in San Diego. And they've become Palisade Bio. They are publicly traded. And as I said, my investment in them was just horribly raked over the coals with that little maneuver that they did. So my many thousands of dollars investments, hundreds of $1,000 investments, has turned into tens of thousands of dollars.
So so how did that act? I mean, I don't know if other people are interested in this, but I'm kind of curious to see how that all happened, because you're saying that a SPAC took over the equity in the corporation, right?
I wouldn't say took over. The current officers of Leading Bioscience chose to go public through a SPAC, and that was Palisade Bio. So their publicly traded name is Pali, I think, P-A-L-I, Palisade Bio. Anyway, the value of all of our private investment, our angel investments in this company was just, it's 1/10 of what we had in the company. And there's a lot of the investors, the angel investors in this company, that are quite upset over that haircut that we all experienced in order to go public. And we felt like the SPAC, there was and I'm sorry, if everybody doesn't want to listen to this, we can take it offline and be happy to talk about this. But not only did it go public at a set price, but then our investments would be set based on I want to say it was a 4-month average of the publicly traded amount. And of course, they drove it down after it went public at a set price. They drove it down to much lower. So it meant the real business in this, and as I said, a SPAC is a publicly traded company. I think it was based in back east. I don't remember, Vermont or somewhere. And it had absolutely no product, but the controllers of this the SPAC would force trading on this so that it was a highly traded stock and could be an ideal way for private companies to go public, but they manipulated that down again so that the real investment, the real product behind this, which was LBS, which is now Palisade Bio, all of our investments were, as I said, reduced to 1/10 of their value of the dollars we put into the company. That's that whole exercise we should probably talk about some later time.
Yeah, it's interesting, with all the different things that I'm seeing, I don't know if other people are about SPACs. It's interesting to hear someone that has firsthand experience, albeit negative experience with it, about dealing with SPACs. I'm not at all knowledgeable about the whole realm of SPACs, but I keep on hearing them come up on my radar screen.
Right. I've had 2 of those events and neither one have been pleasant.
Wow. All right. Anybody got anything else here? How are you going to be trading the Monday here coming up? Neil?
I was just going to add just one quick comment. I liked, and it's a little bit off the wall, but Kirk's title of his little document there was Events and Movements that Offer World-Changing Potential, and he offered really good categories. The one that's missing that I have no idea what the impact will be in the next few years is the impact of COVID and people working from home. I used to be in the high-tech business, and especially in high-tech businesses, some of my associates are saying that the companies are changing to not going back to work or not requiring to go back to work, except maybe once, twice a month for meetings and things like that. And just think of the seismic shift that's going to happen in the cities and such, where you've got the high rises, you got the infrastructure around that with the restaurants and everything supporting all the people going to an urban center. I see that changing now, where they actually are losing candidates because they haven't decided on their work at home policy, and losing high technology talent because those guys are going where there's not a requirement, and that they can be in any region of the country they want to be in and such. And just the real estate impact and the lifestyle impact, it's another world changing event.
I concur, Neil.
Yeah. The more I see, I had to go into work because of some of the things I was, when I was working 20 years ago. But now I'm looking at, other friends of mine, and there's really not a lot of reason except for the human interaction of dealing with clients, and actually even clients. I'm dealing with more things remotely, contractors and stuff like that, all with email, and very, very few one-on-one, face-to-face. I miss all you guys, though. It's like
I know.
I miss all the people seeing face-to-face, and I was trying to figure out some way to use the Zoom to be able to see everybody. And it looks like
we'll have to use Kirk's investment in Oculus, and we'll all get virtual and 3D and be in the room together.
Yeah.
Because I'm in Utah, and I mean, it's a great benefit to me to join you guys because I couldn't come to the live meetings much. So
Yeah.
there's good and bad with all of this.
Right. Yeah. All right. Any-
Opposite to the demand for office space dropping, the residential real estate has been tremendously going up because of people now staying at home. They want more home space. They can move further away from the office centers. So that's another direction we can go.
Good point. Very good point.
Yeah, that's actually a really good point because that's exactly what's happening is instead of some of these millennial homes and stuff have been getting smaller, but now they're going to go back to getting bigger because now they each, if you have a married couple, they each have to have their own office space. And so that part of that evolution, seismic change in urban centers and residential centers because of all of those impacts.
Good point. Very good point.
Hi, Ken. Can you hear me?
Yeah.
Hi, this is Katie. I don't have a cold. My wife uses my computer, so she uses it for Zoom, and I don't want to change the profile. So this is Octavio Simus, but it shows up as Katie.
Okay.
But earlier, I think I came in late. The gentleman was Kirk that was speaking about the crypto. And so if anybody's interested and wants more information or just share ideas, please let me know in the chat here. I've been buying and selling crypto for about a year, and I use Kucoin. I use 3 exchanges, Coinbase and Celsius. I do staking. I have some robots set up, so on and so forth. So I'm not an expert by any means, but I've been very, very much focused on this space, and I use different exchanges for different reasons, for different outcomes. There's also very important tax implications. So if anybody here is thinking about potentially getting into it and just wants to chat about, concepts, ideas, things to avoid, mistakes I've made, I'll be more than willing to share. So
You want to put your email in the,
sure,
the chat?
sorry. Yeah.
Put your email in the chat window, and then we'll see if we can. There's Kurt.
If anybody, because I had to go through a lot of different things to come out the other side. So if anybody has, again,
Yes.
no expert, but just to share experiences and things to avoid, I'm open to that.
I have a question. Based on your experience, could you compare and contrast doing what you do as opposed to investing or trading in the ETFs for cryptos and futures?
Yeah, it's a very, very good question. I think the first thing is you have to have the right mindset. I think people talk and understand the volatility in crypto, but they really don't appreciate it until you go through it. I've had drawdowns at 70% in a week. So I think I use exchanges and I do those types of tradings. I also do a base trading with ETFs. I think they're 2 different goals, the 2 different outcomes. I think you have a lot less volatility with the ETFs than of course you do with the direct tokens. And even so, even with the ETFs, the volatility is high, but you're seeing volatility 10%, 15% in a week with ETFs, and you can see 50, 60, 70% in a week and 2 weeks with the exchanges. I think it depends on your risk profile, and also need to understand your tax exposure, because crypto is taxed as real estate, but considered an asset. So it's quite different in how it's being treated, and there's tax harvesting. So I think you can do both, but one is a more delayed and it's a different volatility and less returns. And of course, you have the advantage of putting it into an IRA or a 401k with ETFs, where you wouldn't have that, obviously, unless you get a crypto IRA with tokens.
So a recommendation has been made here. Rolf says, could you make a presentation maybe at one of the later meetings, next meetings, that with your experiences on it, outlining the pluses and minuses on the crypto.
I'm not much of a presenter, but sure, I will. Sure. Let me-
This,
let me-
you
let
know,
me
I'm
put
not much of a
something together.
presenter
Yeah,
either, but
sure.
the thing is, you're sharing what you know,
Yeah,
and letting, you know, being open to the people's questions about, you know, hey, how did you do this? Why did you do that?
absolutely. Yes, Ken.
It would
I'll
be
do
great.
that. I'll do that. We'll schedule something, obviously for not, maybe in 2 months,
Okay,
after the tax year, and I can give you some real world examples and what's happening. And sure, I think that would be a stretch for me, but I would enjoy doing it. Thank you, Ken.
we all need to get a little bit of stretching done.
Yeah.
All right, good, thanks.
You bet.
We'll proceed to call the meeting to an end here then. A bit early, but it's been very good. I'm glad to see everybody, or actually kind of see everybody. Any other reason why we shouldn't close the meeting? And I wish you all a very happy Thanksgiving.
All right.
Thank you. Thank you.
Thanks, Ken.
Hey, thanks, Ken.
All right.
Thanks,
Catch
and
you
same to
later.
you.
Thanks,
Right.
Ken.
All right,
Bye.
bye.